Hey everyone, this is Will with Flow Trade FX. I'm bringing you a new video in the intra-week flow trading system. This video we're going to be talking about tradable patterns. Now these tradable patterns, we're going to be able to spot them from the 1 hourly time frame, aka our mapping chart, as you remember from a previous video. And we're going to be seeking these around the key levels of support and resistance that we find on our intra-week trends or on our intra-week charts. Now, off these areas, we're going to be looking for intra-week trends, which may have happened over the past day, 2 days, 3 days. We're going to be looking for breakouts from congested areas in which price has been between two price boundaries for several days, maybe 3 or 4 days, and price finally breaks through and gives us indication that it's looking to move with momentum. We're going to be seeing those trading patterns. I'm going to be showing some continuation moves where they're going to seem they're going to seem kind of like they're breakouts from congested area or price is just congesting. But typically it only lasts between 24 to like 40 or 24 to 36 hours, where you can see price go into like a tighter range at one of the extremes of whether the price has been going up or whether it's been going down. You can find that there's a tight range that may happen or form, and you'll often see this like exact price formation, and that's actually where price is going to set up for its continuation moves depending on where your key support levels are, and that's something you'll find pretty often. And we're going to also be talking about reversal moves. Now, you may be asking yourself, well, didn't he actually say that we're not going to be trading reversals? Well, slow down. These reversals are actually going to be confirmed by the market flow, and that is how we're going to be taking this trade. We're not going to be taking trades off of an area we expect it to bounce and go the opposite form, like direction of the flow of the market. We're not going to be taking those trades. We're going to be taking trades where price validates the decision by moving in momentum opposite of the previous like bias. So I'm going to give you guys examples of these visually so you'll see what I'm talking about, and it's all going to be very clear. Let me give me a second and I'm going to set up my next chart and I'll break down the intra-week trends. Okay, perfect. So here we have an example of an intra-week trend. Now, like I mentioned just a moment ago, intra-week trends happen over, say you have a 3 or 4 days and two of them, the market has been moving in one direction. That is an intra-week trend. The market may be moving in a direction for most of the week or for several days in the week. That is intra-week trend, where you're going to be experiencing times where price will decline if it's a downtrend and eventually hit a point where it gets exhausted. Now, when the market gets exhausted here, we're going to just mark this with a horizontal level as we do when we're marking our intra-week support and resistance levels. This would be a support level. And price goes on to here. It fails to break to the area where it was previously, so it forms a level of resistance. So we mark that down here. Now, as price comes back down to this level, which we marked horizontally, this level, we're going to be looking for a reaction. We're not going to be looking to reverse this trade and go to the upside. We're going to be looking for momentum to continue to carry price through to the downside, through this support level to the downside. And as we know, and if you don't know, I'll break it down real quick. There is a known idea or fact in Forex or just trading in general that old support can become new resistance, and vice versa. If you have a old resistance, it can become a new support zone. So here we have a support zone right here that has now acted as a resistance. Now we have a resistance here and we have a resistance here. Now with this reaction, since price broke through with momentum, now we're going to be looking for a pullback to this area to retest where price holds this area, in which we're going to have this trade validated. Now typically when you get a intra-week trend, the distance you want to pay attention to is the distance that price took to get exhausted in the first place. So marking the distance between this level and wherever price may have started from up here, that's where you're going to be using that to calculate how far of a swing price may go after it swings this way. So you know how to set your support or your stop and your target levels. But we're going to be getting into that into a later video, so I'm going to leave the target levels to a different video. But for the most part, once we get to this retest right here, we're going to be zooming into our 15-minute time frame to get our entries, to make sure we get the best possible entries as possible. And that's where that's pretty much what you're gonna see in an intra-week trend. And I'll just give a little tip here. Remove some of these lines. So with intra-week trends, we want the price to retrace to back to the support level of that, or back to the support level it made recently, or higher, and then peak back below that same support level, and as if this were to turn into resistance, like I was mentioning. So we're always going to be looking for those type of patterns. We're not going to be trading the bounce off of this area. We're not going to do that. And when we do get these experiences where price may come all the way down here and then come back and it's just shy of hitting that level, creating this new support level right here, we're not going to take that trade. That trade has not retraced fully, so price can still end up retracing back to this level. Or if you have lower support levels or older or previous resistance levels below, you can see that price may get to that level and you'll await your reaction at that next support or resistance level below price currently. But just to clarify, we're going to be trading in the direction of the flow of the market. Then we're going to be waiting to get these resistance or support levels, to wait for a reaction of that level when price continues to move with the direction of the market, and potentially find a resistance back above price, which will give us our entry, where we're going to be zooming into the 15-minute chart and we're going to be taking this trade. It's pretty simple. I'm going to give a live example of this with the actual chart. But just to remember, we don't want to see price break through these levels lower, pull back and shallowly, just do like a real small shallow pullback and fail to actually touch this previous support zone as resistance. We don't want to see that. We want to see price actually come and touch this level. We wanted to actually touch this level and begin to bounce off away from this level, and that's where we're going to be finding our entry, because that will be an intra-week trend trade and we would look to take that opportunity. Now that's pretty much it for the intra-week trends. Now I'm going to bring up the chart and we will go through that example together. I'll see you in the next little clip here. 1 second. All right, all right. Bear with me one moment. I didn't forget about you. All right, perfect. So here we have a chart for the Australian dollar versus the Japanese yen. Now, we can see that there has been a significant drop in price starting here on the chart. We have one down day, another kind of down day where price peaked high and then ended up dropping to create a new low. And then we have a pullback day where price broke through each of these. Where price broke through each of these previous support zones that it may have made and peaked higher and actually floated around higher just a little bit before continuing to break below and go on another swing in the direction of the market flow. So we're going to go ahead and mark these resistance levels, and remember the rules. If price has broke through a level twice, going up or down and down through that level, then price is no longer respecting that level. So we're going to go ahead and draw these out. We have that level, then we have this level below, which extends all the way over here. These are terrible lines, y'all. My apologies in advance. Something like this. Anyways, all right. So we have this level right here that has been holding as a resistance level until price comes here and breaks through it once and twice. So price no longer respected this level and broke through. That was no simple 3 or 4 pip poke through, because we know the markets are not perfect. That was a significant run of price above that level. And we see that this bottom area has been more or less respected as of now. So we can extend this out. We get a slight pullback into that area and then a slight reaction out of it. But we didn't quite get a breakthrough, and there was not momentum that would lead price with momentum out of there at this moment. So this would not be considered a pullback, and you would not take any trading opportunity around this area. And again, we're not looking to guess where the market is going. We're looking to trade with the flow of the market to make sure that we get the best entries as possible. Now, if you enter here and the price had reacted to the upside, somehow to the upside, then you would have been taking a loss on this trade, because In fact, the market flow continued down, and which that's exactly what we were expecting. We marked our levels right here as a low, and then we see a high right here. Price did not respect that level, so we did not take any trades off this level as far as a new uptrend starting. But we definitely see that price dipped back down, and that was just a simple fake out, and those happen. But we have a system in place where we're not trading fake outs, because we would only trade upwards in this situation if price validated it by breaking with more momentum to the upside. I'm talking large bars, and then came back to pull back to this level, which would hold price significantly to the pip. And then we would continue to trade in the direction by zooming into our 15-minute chart and waiting for the specific price pattern to form there. Now, to just finish up with the bottom of this support range right here, we see price was held there once, twice, and then price broke through with significant momentum right here. You see this bar right there, and that's what we want to see when we start to see breakouts, especially with the follow through. We have that one, and then with this right here as a follow through, that's a perfect example of what breakouts look like. And we're not going to be trading these. We are in fact going to be waiting for the pullback to this level and see price get held at that level and respected at that level. Now, you might be noticing this little pullback right here. Like, what would you do in that situation? Well, it didn't come back to retest this, and we're only looking to trade the first pullback to this previous support level, which is now acting or potentially can act as a resistance. And that's exactly what we end up seeing. Price comes down here to create a new low, a significant low, where price ends up actually respecting it twice after breaking out to the upside. And again, we wouldn't take this trade because the price did not retrace back to this level. Price could have very well kept on breaking down, but we did not get our entry because we are not going to find, we're not going to be taking this type of entry. We're not going to be looking at that as an attractive entry. We know that our prime entry would be here. This is where we would get the best entry, given if price were to continue to break up. We would have a basis for it to pretty much price or gauge where price is going at that moment. But given that we get this price holding down here, we draw this new support level and wait for price to react between this level right here or a new support level right here. Now, we see that price comes up here and it gets significantly close. This line is not a good line, but I believe the actual low of this area is somewhere around here, which ultimately lines up with this to the pip, where we get a breakout above slightly, and you see a nice momentum off of that level. We get that entry right here, almost to the pip. Our stop and our targets are clear at this point. We could see that swing and the breakout, so we'd be targeting that swing to the bottom below here. And I'll get into how we exit trades and make our stops, but I can tell you that this would have ended up being a very solid trade. Many pips on this specific drop right here, and the market even gave you ample time right here to make sure that you had gotten out before price continued to go up higher and did not actually respect this level right here. Price actually ended up getting held up just shortly below the previous area where price got held up, which we're not going to talk about that in this specific video, but we are going to mention that we do have we've completed this, and then we do have a potential new pattern that we are going to talk about in a later part of this video forming through this area right here. And if you can spot this right now, I believe you are in really good shape to be taking advantage of this system fully. If you could spot what I'm talking about before I get there, especially just based off this. But again, I'm going to be getting into the trade management and how to exit and set profit targets in a later video. But this trade would have been a good trade, and we would have taken it based on this. We'd have been able to take our trade based on this level right here, and the reaction that we got based on that level, that was a double check, leaving this a very good trade and a good example of how the intra-week trends will form on your charts. And actually, this was only a couple days ago, so this was actually a live example that someone can take advantage of. At this moment of recording this video, I'm just breaking down this chart just because it's a perfect example. But when we're doing webinars and stuff, there's definitely going to be we're going to see more of these live examples. So this is just going to be getting you to gauge, and now you can go on your own charts and actually go back into history and check out the intra-week trends, see how many intra-week trends you could spot. But that pretty much wraps it up for the intra-week trends. Let me see. We might have one more. Let me see. No. So next we're going to be just talking about the breakouts from congested areas. This is going to look fairly similar, so to speak, to the next one, but you're going to notice it lasts for much longer durations. Oh, apologies. Okay, so here we have the breakouts from congested areas. I get better at that. We have a downtrend here where price has been running for quite some time and it's covered quite some distance. Price gets tired and it ends up forming a bounce level here. Price comes up and forms a resistance level here, comes back down to retest this level, and instead of breaking out and getting a pullback continuation pattern like a intra-week trend, we actually get a bounce off this level back up to retest this previous resistance level, creating a congested area, a range for perhaps several days even. Now, once we see a breakout either to the upside or to the downside like we do have here, we're going to be waiting for a pullback and for price to retest this level, which was previously support, as resistance now, and hold price and begin to move back away with momentum, giving us a entry signal right here away from this congested area. We already know prices got the bias because we have the momentum that broke out of this support zone, and we have the initial momentum that started the week in the downside, and we have a tight range towards the extreme of the previous move, which in this case is a downtrend. We have a tight range, and we have that at the extreme, meaning the lower portion of this down move, and price bounces not only once but twice but 3 times, nope, 4 times out of this between these two brackets prices. We finally get the momentum breakout to the downside. We get a retest of that previous support now as resistance, and we see price breaking away. We zoom into the 15-minute chart and we would enter this trade, and that's pretty much what you find with a breakout from a congested area. you'll notice that price will stay bracketed between prices, maybe two prices. We know the markets aren't perfect, so sometimes they don't all line up exactly to the pip, but you want to see price at least getting to them within 3 to 4 pips. And if they do break out, you want to see them breaking out only by 2 or 3 pips, 3 to 4 pips on the breakout outside of this zone. Just as long as price comes back and closes within those brackets, uh, it's still a go. But if you continue to see price break below those brackets, then you know that you're not necessarily in a congested area because price is no longer respecting that level. It might be forming a different type of structure or a different type of pattern. So you just want to keep your eyes open and make sure that you're marking these horizontal levels and also marking the vertical levels when you start to see price bounce between. It'll give you a better visual so that you can consciously wait for the breakout, a pullback, and know exactly what level the price should be pulling back for it to, qualify as a trade that we would take. But I'm going to give you another chart example of this. Bear with me one moment. Okay, so here we see that prices came down. I don't actually know that you can see this. Okay, well, now you can see it. So, okay, perfect. So now we can all see this. We see prices came down from a previous run, and then we see price make this level at this price right here, start to begin to, you know, bounce away from this level, creating a potential support zone. And we see price retest to the upside, creating this new resistance level here. And again, we see price come down. And what do you see? What do you notice about this? That and that actually line up. So let's continue. Price bounces away from this level and comes back up almost to the pip, exactly where this one came up. Okay, so you guys are starting to get me now. Again, one more time, price comes within pips, within 2 to 3 pips away from this exact level and this exact level right here, making this a connected level. Now we can connect those levels and we see how price came up here to the pip and then here to the pip. So we can connect those two levels. We even get one more where price came over here to the within pips of this area. So we can get that right there going. And then you see here one more time, price came back down to the pip before breaking through with that large momentum bar right here. This bar. You see this momentum bar? This is exactly what we want to see. We want to see breakouts through these levels, exactly with this type of momentum. So after that, you know what we're going to do, our typical waiting game. We're going to wait for price to find its new level of support or give out, and then we're going to be looking to take the first pullback to this level. So since this level is here and you know the rules, it's only been broken one time, so we can actually say that this level is still in place. So we're going to take this level and extend it. We're going to extend it. Now that's not straight by any means, but you could tell right here that these line up fairly good. Now we're going to take that trade off of this level because it pulled back to this area. This is the first pullback, and then as price closed away, it closed with momentum. Momentum back in the direction of the flow of the market. Right down here, we got one, we got two. After a long congested period of time, price broke out with momentum in the direction of price and gave us a pullback to the pip, which we got a momentum close away from the level of previous support, now acting as a resistance, and we see price continue to drop. Price came back up to retest one more time, but it didn't get quite close enough. And if you had a stop above this area, you'll find out more how to set stops in a further video. But this is just about noticing the patterns and how we find these patterns and see how they develop in actual charts. So although price retraced here, again, it was small bars. You never got any momentum breakouts to the upside. It was all very small within even its own type of smaller range. If we were scalpers, we could probably see this little range right here and trade that intraday, and people wait for a breakout out of this level, which you finally get a breakout even out of this small tiny range. You get a breakout right here, another pullback, and a continuation. But our trade would have gotten in here because we're looking at the breakout continuation of this level in particular, in which we were able to take advantage of this. We're able to take advantage of this entry right here. You can tell I'm not too great with this cursor. We got this entry right here. Although price pulled back, it wasn't significant enough and it would not have hit our stop loss. And then we get this whole run down in which price continues to create new lows. Price gave us another support here, but it didn't line up with this exact support level, so we would not be marking that as a level of break. This would be its own support level, and we would now ignore this level because we see price has also ignored that level and has broke through it once and twice on the way back up. So that would not be a level that we would keep anymore. We would only be paying attention to this level, and could potentially even find more trades that match up with this whole breakout pullback continuation as we continue. But we would have gotten this market, had our profit target set, and had our stop losses set accordingly, and we would have been able to take advantage of this whole down move and would have risked very little. We would have been risking very little on this trade and had all of this to gain. So that would have been a good trade. Several good trades, good stuff on this one. Just a very simple process. I know I left a lot of these marks on the screen, so I'll just try to get rid of some of those. And hopefully that'll help you see it a little bit better. For the most part, very simple process. We see a congested area. We see a momentum breakout outside of that area. Price only broke through it one time, so we just extend this level out, continuing to watch price and wait for a reaction off of this level. And we finally get that reaction and take our trade, the first pullback to that level. And yeah, we get our entry here, and price continues to trend down for 1, 2, 3, several days afterwards, hitting our profit targets and also yielding extended price. Price offered us an opportunity to continuously find, lower price movement in the direction that we already expected. So we would have been able to take this trade and continue trailing this trade down. That pretty much does it for the breakout for the congested area. Let me see, we might have one more. Nope. Okay, so next we're going to be talking about the continuation moves. Now, when it comes to continuation patterns, um, it's going to be very similar to an intra-week trend, except the second pullback doesn't always get to this previous resistance level. So you, in essence, get a triangle. Now you can see this is a lower bottom. You have one support, two supports, and those both line up and make a line now because that's 2 points of reference. And you have 2 points of reference here in which we get a flat bottom where we can mark a horizontal level. We have this higher level which we can mark, and we wouldn't mark this level because we have this significant level right here. That price failed to make it. So, and I don't usually use trend lines. It's not nothing that I use too often, except for when I notice a triangle, whether it be a flat top triangle or a flat bottom triangle. In this case, we have a flat bottom triangle, despite my very squiggly lines. We do have this bottom two support levels that line up and create a new support level. So we'd wait just like we would from a congested breakouts from a congested area. A triangle is just a triangle shaped congested area. Now, flat top triangles and flat bottom triangles, I believe, give us a good indication for where the market flow is too, because not only do we have this move in which price made, which brought us into this range where we have these two support zones, but we also have this diagonal pressure that is just kind of building up as price is making these these swing highs and then creating lower swing highs and then stopping out at this same level. Eventually price hits this one equilibrium point where it's just either going to bounce again or it's going to break through. Now, when we get these like the flat bottom triangles, typically the breakout happens in the direction where price is flat. You can kind of use these as like a directional arrow that also aids you visually to see the flow of market. But in this case, like I said, we get a breakout with momentum to the downside, and then we get price retesting this previous support level with and it actually respects that level and continues to bounce off of that. You know what we would do, zoom into the 15-minute chart and be able to take our entry with precision and accuracy off of this level, the first pullback we get, and we would be able to classify this as a good trade. And that's continuation moves. You know, sometimes you'll happen where you'll see these in downtrends, or they'll happen where you're going to see them in uptrends. But I should clarify that when it comes down to the flat bottom triangles or the flat top triangles, I prefer not to see a breakout in the direction of the diagonal, like the diagonal level. I prefer to get a breakout to the bottom side. I don't trade breakouts to the upside of these continuation moves. Because if you get this level and you got this level up here, price can easily just break this level and meet resistance at this level, which would have given you an invalid trade at that point. Or price can just continue to break higher and make new highs. So I don't trade off of the vertical line. I trade off the straight flat line. So whether that be a flat top triangle or a flat bottom triangle, you're going to always want to find those in their respective trends. Flat bottom triangle and a downtrend, and flat top triangle and an uptrend. You don't want to be trading flat top triangles or flat top triangles in a downtrend. That might not be what you're going to be looking for, and vice versa for an uptrend. You wouldn't be wanting to trade flat bottom triangles in an uptrend, because we're not going to be taking trades off of this area. We're going to be taking trades based on a different metric. And if price is failing to break higher in an uptrend, then that means that uptrend is experiencing weakness. And we're not going to be trading weakness, we're going to be trading strength and flow of the market. Now I'm going to break down a chart example for continuation moves, and give me a second to set my screen up and I'll be getting right into that. All right, let's see. Okay, here we go. So with this one, price had been on an uptrend. I know this for a fact that this price move right here came from a more significant price move down below. It was coming up for quite some time. Like price had been coming up in this direction already. It had been coming up to get to this point right here where it initially made this high bounce point. And we can mark that level here. And then continued to drop down and made a smaller, shallow support level below. But as you can tell, price continued to just didn't exactly retrace up higher, but it did initially touch it and break back below. And since price did break back below, we can continue to look through this. Plus, it was only a pip or two breakout above that level. And then next, we would extend it over here more. Wow, my lines are not great today, guys. Whew. Okay, so we have that level, which is not straight whatsoever. Anyways, all right, that might be the best we're going to get on that one. Anyways, let's see. So in any case, we have price run down, attempting to retrace after this previous move that had happened over here, and it fails to do so. This move that happened here, price fails to get down to the level in which it previously was at. It then created a new level right here, a support level down below. It then continues to trend higher back to retest this area right here, and ends up holding and respecting that level, and we get a bounce off of that level, creating a higher swing low than we have here, and ultimately we get one more stall of price as it gets into this level and starts to bounce away again, but gives us a new support level right here, which is very, very shallow. But ultimately price breaks out with momentum, and I'm guessing by now you've already noticed that we're in an uptrend. We get a pullback which fails to reach the origin of that initial run, and then we get a break to the upside, a bounce away from the support I should say, back to the level where we previously had a resistance, and respects that resistance level, comes back down and creates a new swing high higher than the previous swing high, and then ends up narrowing up to this point one more time where price retested this level, failed to break it right away, ends up pulling back, giving us a diagonal line on the bottom side and a flat top on the upside, and now you see it. We have a flat top triangle and an uptrend. We see this diagonal line building up pressure as price is making higher swing highs. Eventually, you see this momentum express itself with a large breakout candle right here to the upside. And then we even have a pullback, which happened more or less to the pip. My line isn't perfect, but as you could tell, it was easily within 1 or 2 pips of this area in which we have a pullback, and then price continues to trend higher than this area onto new highs, and that would have been a valid entry around this level. You would have zoomed into your 15-minute chart, seen this pullback down to this level, entered your trade based on that, and continued to ride this price all the way up. That was a terrible looking arrow, but you end up riding price all the way up to your profit targets. And again, I'll get on profit targets in a later video. I just want to go over each of these tradable patterns so that we know exactly what we're going to be looking for in these new live examples. Now this is going to be like the bread and butter of the system. Anytime you see these patterns, these are going to be high probability patterns that I have seen several times, and they happen day in, day out. You notice them on the hourly time frame immediately once your eye has been trained to spot them, and then you start to see where, okay, I want to place my trade here. Let me wait for price to retest and give me my entry. You're going to be looking at the market much, much differently now that you have a parameter and a guide, so to speak, to interpret what's happening with price, because price is like a book. You got to read it. Now, give me a second and I'll get us started on the next chart. Okay, so we actually have one more up chart. Well, that's fine. So yeah, this is another up move. We have price come down here. Oh, my apologies. Excuse me. So we have this down move that happens here. Price comes down. Excuse me, everyone. It's almost midnight here, and I'm recording this video to bring you this content. Apologize. It's been a very long day for me, but let me get back into it. As you see, we have price coming down here, giving us this downward move. Price initially finds support down here as it bounces away from this level and goes on to break through this previous resistance area with a decent momentum and follow through. Ooh. We have the momentum breakout through this level here. So that would now we would be either looking for a reaction to the upside. If we continue to get a pullback to this level and it holds this level, we would have looked for a entry at that point. But I'm going to talk about exactly how that looks when we trade reversal moves. For this one in particularly, we would have made no decisions at this point. We would have simply just marked. We would simply have just marked this new level as we see it price bouncing away from it, and then we would disregard this level now because it has been broken once and then came back to be broken twice right in here. So we would no longer use this level. We would have this level only, which has been the beginning of this run, and we now have what seems to be forming a resistance area level right here off of that, in which we see price continue to drop down below that level, come back and fall shy of that level. Essentially, we still have no moves within this area because we need a breakout through a structure, and in this case we don't see that, so we are not taking any of these trades. Now we start to see price break through again to the upside. The only thing we have here is this level, which I'm going to draw a little bit better. Not great, but we have this one level here up until this point where price breaks through significantly. And instead of continuing this momentum and giving us some form of a entry pattern, we actually get price come back down and break through this level significantly, back down into this area below this resistance level where price did not hold it as a support. Now, price came back. Now we can remove that line and create a new line right here where price ended up coming down and breaking below this price, ended up coming back up, falling shy before ended up poking through just a couple pips, just holding this level right here. So we noticed that, and then price ends up dropping back down. So as you start to see, we have a up move for several days. Price has been going up. We have a top zone that's forming. We have a new support level. This is a minor support level, and as you can see, it has been broken through, and it was extremely shallow and didn't necessarily give us any type of entry because this is no structure that we would trade. But at this moment, we start to see something forming. So at this moment, we can start to see, okay, there's a significant level here that price has found. Price did not find this level significant, so that's not a concern of ours. We're just seeing that as one swing because price had swung until it came down here to create a significant low. That has been its own swing. This is a new swing that price has made, bringing price all the way up here, finding a new support or resistance level above, and then reacting off of that by bouncing away, and ends up coming down here where we get a new low, and price did not respect this level, so we would no longer respect this level and expect it to work as some sort of resistance. We get this breakout right here, and it's let me see it. It might be lined up, but it's significantly lower, and price broke through with a decent amount of momentum. So we draw this level right here, and as you see, price bounced off of it and reacted and brought it just about to this area where price was previously, where we can potentially connect these two. And then we get another bounce off of that area down to about here. And then we get a final run where price gets stalled out at that level again. And then we get a last final support where price broke through with significant momentum. We get this move where price broke through the top with significant momentum, and we get a pullback to that level roughly 2-3 pips away from this exact level. It's not spot on, but the markets are never too perfect, but it does pull back, and then we get our entry in this area where prices continue to move up and stay above our entry area, coming nowhere near our stop loss, only headed towards our profit target. And that's how powerful this system is, y'all. It's relatively simple, but it is effective. And that as long as you're following the market flow, you're able to take advantage of these trades and continue to find profits in the market. That's pretty much going to be it for this chart. I do have let's see, reversal patterns here, which is going to be the last tradable pattern that we're going to be looking at. For this one, you'll see how price, my apologies. For this one, you'll see that price has made a nice consistent move down right here. And then it finds a support level below, comes up to bounce off of this level and find a new support level right here, kind of at a relevant level considering price came from way down here, but at this point we're going to mark it because it's significant to what's currently happening. And we see price come down again and retest this area right here, and we actually get a bounce off of this area, and instead of bouncing back in here like a congested pattern would be, we actually get the breakout with momentum through this level. Now, those who are really paying attention right now, and I know you guys really want to get this, so you'll probably notice that for congested area or for breakouts from congested area patterns, we would wait for the market to break through here and break through this level, continuing the flow of the market this way. But instead, what we see is, in fact, price giving us the momentum to the upside. And that's exactly why we don't trade bounces off of these levels. We look to trade bounces off of these levels. So if price does end up finding continuing to drop further or finding some form of support here, we don't have to enter prematurely and potentially get the wrong direction. We want price to tell us where it's going, and we want to be flowing with price. And in this case, we see a price making a swing low, getting stalled out, failing to create a lower swing low. We get a swing high right here, and we get a higher swing high, and then we get price reacting off of this support level or this resistance level, which we thought was irrelevant at one point, but we always mark them. This is why we mark these resistance and support, swing highs and swing lows with these horizontal lines, and get rid of the ones that have been broken more than once. So essentially we get price making a higher high right here, we have a higher high right here, we have a higher low right here, and we get price being held by that, where we would zoom into our 15-minute chart and take our entry right here, and that would be a reversal trade. So instead of selling here, we would be buying the market and looking to continue to seek this trade going up. Now, reversal moves are great. We definitely don't trade the bounces. Again, if we see price bouncing off of this level, we are no longer looking for a buy opportunity until price may come back and retest this level after hitting down here. After hitting down here and breaking through that level, if it bounces down from here and goes back up, then we can look for buy opportunities at that point. But we would not be looking to trade a buy opportunity if the market comes down here, because if it drops through with momentum, especially in relation to this down move that happened previously, then we know that the flow of the market may in fact be short, and it will not necessarily be something that we want to be buying against. But in this specific situation, we can see that price did in fact get held by this resistance area that is now acting as a support level, and we would be able to take our entry here and trade the market to the upside. That's pretty much it for reversal moves. I'm going to break down a real live chart here, and we're going to be able to see that how they form, and I'll break that down for you in just a second. Let me get my screen set up. Okay, so here we have the Euro Japanese yen hourly time frame. We see a down move that happened here. We also have a pullback where price came up to about here. We have a swing low right here where price reacted initially, bounced off of, and came down here. Came up to that point, came down here. This specific level broke through significantly, but since it's still closed up, I would definitely, although it closed up, I would still move this level down to here and break through this because it went through it one time and came up at another time. So technically this level has been broken twice. And then if that wasn't enough, we get the level broken right here 2 times again, which definitely negates this level. Although it closed high pretty much to the pip at that level, it still breached lower on a smaller time frame. In general, price reached down here. It just failed to close down here. It ended up still closing above, which would have still broken this 2 times. So we would not keep this as the level. I'm going to go ahead and remove that level here actually, so that we are not focused on that. At any rate, we see price come down here, make this level, ended up breaking through it fairly significantly and creating its own new swing level right down here. So we would actually go ahead and take away this level here. So far, we just have this one level at the top here, and then we have this lower support level down here. And as price bounced away from that level, we see it came back up here and ended up touching relatively close to the pip with this one. And price ended up, coming up there within 2-3 pips from that one right there. So as of this moment, price seems to be in a range. It's not the tightest range, but it seems to be in a fairly large range. We have this downward move that has happened previously where price has seemed to be breaking and creating newer lows. At this point, it seems price is having a hard time respecting the structure of the market at this moment. So we see price continue to drop down lower, creating a new swing low point, which, okay, that's short now. Cool. Now we need to wait for a breakout and perhaps a pullback into this level if we're going to consider it a range or some form of entry continuation. Instead, we get price breaking significantly above this level, this previous support level, almost to respect it, not at all, and then made this its own swing high right here before coming back down, breaking and retesting below to this same exact support level right here, almost to the pip. So we can connect these two, and that would be a new level. And now we have a low happening. We have this area right here, which price made. And then we have a bounce happening off of this level. So now we see price rally all the way up here, getting to this level and breaking through it with some momentum. It ends up retesting within 2 to 3 pips of this breakout level right here, and we get a breakout all the way up here. Now, for those of you who already see it, this has been a this has been a reversal trade where instead of respecting the range, we have 1 bounce, 2 bounces, 3 bounces. This would have now been the 4th bounce of this small range. Price instead comes now, breaks out to the top side, several pips, just several pips out of this area, and ends up coming back down to retest uh, the previous resistance level now as support, and then we get our entry right in this zone where we would zoom into the 15-minute time frame to catch our first entry right here off of the support level with a profit target well above these areas right here, where price initially does meet that and exceed that by quite some pips, which would have given us a profitable entry with minimal risk and a pretty decent upside. Um, that's pretty much it for reversal trends. You know, you find them towards the bottom or towards the top of consistent moves. This has been trending down for quite some time now. And as you see, price came into a consolidation area where instead of dropping and continuing lower, price actually failed to do that and made higher highs and broke through with momentum to the upside before giving us a brief pullback down to the zone, which has actually been right there and taking off in the direction of the new market flow. That's pretty much it for breakout trades. That's pretty much it. Uh, let's I'll close this one back up. But that's pretty much been it for the tradable patterns. Today we've seen the intra-week trends. We've seen breakouts from congested areas. I've broke down the continuation moves, and we've also seen how to trade the reversal moves. Now, all of these you're going to come by in different fashion, shapes, or forms. One exercise I would say is homework is to go through your charts, scroll through, you know, previous historical data of those charts and look for these patterns. You'll notice how often they pop up, which patterns show up on different pairs more often, but like you'll find all these patterns on all the on all the charts that match the 5% rule. But as homework, yeah, go through and find some intra-week trends. Look for some breakouts with congested areas and mark them with horizontal levels. And then you can also look for some continuation moves. And then finally, the reversal moves. Like take some time and look at those and, see how many you can spot. Try to find how many you can find on the same pair versus different pairs. Really get to know these patterns because this is how you're going to be taking advantage of these entries, these awesome entries, and also being able to minimize your risk by taking trades where the flow of the market is just pulling back and then bouncing off these key decision taking levels throughout the week. Now, that's pretty much it for this tradable patterns videos. It's been a little bit longer than normal. It is a little bit late, so I hope that you were able to still get the full value of this video and that you were able to incorporate these tradable patterns with the rest of the system. Um, that's pretty much it, and we'll see you guys on the next video. Thank you.